Welcome back to the TNT Real Estate Podcast, where we spark conversations that set you up for real estate success. I'm Tyler.
And I'm Tanya, and today we're going to be breaking down the latest news from the Bank of Canada this week, the big drop in the prime lending rate of 0.5%.
Beautiful.
So, Tyler, big question. Is this actually good news?
It is good news depending on which side of the coin you are. I think in general it will be good news eventually. I think currently it doesn't affect many people unless you have variable rate mortgages. And then everybody's dancing. So I know both of us did our happy dance 2 days ago. When they actually decrease the rate. But if you're out there shopping, unless you know that you're going to be purchasing with a variable rate mortgage, it doesn't really affect you that much.
Right. So just to break it down a little bit further in terms of the savings, right? I was just looking at one of our mortgages, which is still a variable rate. We're saving about $70 a month, and it's a smaller mortgage. So when you take it up to a scale of about $400,000 balance, the average person will be saving about $120 to $130 a month. Yeah. So not just like savings necessarily, their payments may not actually go down, but certainly that amount will be going towards the principal payment. Yeah. So that's a big savings for most homeowners who are in that position of having a variable rate mortgage. Yeah. But one of the other things, actually, I just got a notification from one of my savings accounts was actually that rate was decreasing by 0.5%. Yep. They're like, thank you for your business, but just to let you know, the rate of return is actually going to be decreasing. Yeah. So that's the flip side, right? It's less expensive to borrow if you're in a variable rate, but you're going to be making less money on your savings.
On your investments as well. Yeah, it's a lot of, we talk about these decreases, especially in real estate, and we basically only solely talk about what they do to mortgage rates, but there's way more consequences than just mortgage rates decreasing. Yeah. And most people know that the 5-year fixed rate is the majority. It actually follows the bond rate, right? And so just because the interest rate has decreased currently, it doesn't mean the 5-year fixed is going down. Most banks have already done that because the bond rates have gone down in the last couple months. But if you see just this week, they actually went back up.
Oh, really?
So you're not going to see the 5-year fixed go down in the next few weeks unless we see a change of the bond in the bond rate.
Do you think perhaps though that the banks and the lenders are going to have to be a little bit more competitive, right? Because not everybody feels comfortable at this point. Certainly with interest rates increasing so much over the last few years, I don't know that many people who feel comfortable getting into a variable rate mortgage at this point. Yeah. So perhaps they're going to have to be a little bit competitive and offer a good 5-year fixed to get people to sign up.
Fingers crossed. Fingers crossed for sure.
Possible.
I think just basically what you're speaking about, the variable rate mortgages obviously have been historically lower than 5-year fixed rates. That's obviously not the case anymore. So that is, that's why people aren't shopping. They basically want the lowest rate, the best terms, obviously. Yeah. But most people don't even care about the terms. They just want the lowest rate. Yeah. So I think people are still going to go 5-year fixed, even though, or maybe not 5-year, but 2 to 5 years. Instead of taking the variable rate, which I think, my prediction, will probably finally get under the 5-year fixed next year. But there's obviously no guarantee on that as well. Yeah.
It's interesting talking about like what's traditionally the best option, right? For years and years, our mortgage advisors and people we've spoken to in the business have always said variable rate is always the way to go. Yeah. You're going to get nervous with the ups and downs, just like your investments. You're going to get nervous when they sort of start to tank a little bit. Yeah. But if you stick with it, you should be doing well with that sort of variable rate over the long term. So it'll be interesting to see maybe 2 to 3 years from now, looking back at this period, maybe on like a 5-year basis, the 2 years where it was really increasing, was it just kind of a blip that everyone was able to ride and in the end they were doing better than the fixed rates? Or maybe this is the one time in recent history where actually the variable rate was a lower performer than the fixed rate.
This time in history, in the last 5 years, will be studied in economics classes for years and years to come, as well as history, obviously. But it will be an example in economics classes.
Yeah, we've gone through quite a lot in the last few years.
Absolutely.
Okay, so let's think, looking ahead, who is this going to affect? We talked about homeowners and certainly people in variable rate mortgages. But how do you think this is going to affect investors today and in the long term?
I mean, the investors that have variable rate mortgages, like we just said, are celebrating. Every little drop is a celebration. But I think, especially with the affordability issue, I think it's definitely going to help. Obviously, let's cut that.
Okay.
What am I trying to think of? The stress test. That's what I was thinking of. Okay. So obviously with investors, it's going to help the affordability. The stress test obviously is going to help the stress test. You're going to be able to afford more, and I mean especially on those house purchases, or I guess building purchases of a couple $1 million. This is going to help affordability by hundreds of thousands of dollars. Mm-hmm. Obviously, as you get into lower, duplexes, especially in Sudbury at $300,000, it might help a little bit. But the bigger purchases is where we're going to see, a bigger affordability.
So we might see investors kind of coming back into the market, coming back into real estate as an investment, more so than putting their money, hopefully, not always in stocks and bonds, like putting them into the real estate market again. Yeah. And I'm sure, like you said, the current investors who are holding properties, they're seeing a little bit of relief and getting a bit better cash flow as these rates are going down.
Absolutely.
Yeah.
Absolutely. And I mean, I feel like in the last little while, multifamily in Sudbury has been starting to sell a little bit better. Mm-hmm. People are looking into the future, and I'm like, my prediction for next year is that we're going to have another real estate boom in Sudbury, and I think people are starting to see that, so they're picking up the properties at, maybe it doesn't cash flow currently, but next year it'll be worth, an extra $50,000 of equity. Mm-hmm.
So then what about people looking to get into the market? So let's think about prospective home buyers or prospective investors. Yeah. How is this good for them?
The affordability piece, obviously, with the stress test coming down a little bit, they're going to be able to afford more home. And it's not that Sudbury is not affordable currently. It is, half the price of the average price across Canada. And obviously these policies have been passed down for the big centers. They don't really think about Sudbury when they're talking about, okay, let's reduce the 50 basis points. But it does definitely affect us. I think obviously like I just said, next year will be another real estate boom in Sudbury. I think that's almost guaranteed, especially with the CMHC extending as well for first-time homebuyers. But I think all in all, it will allow first-time homebuyers to get back into the market. They can get mortgages on nice houses that are livable. It's just, are we going to have houses to sell them? Which is the big issue. Yeah,
that's the issue there, right? Like, we're going to see more home buyers being able to afford their first home, afford probably a better first home, something that's more move-in ready, maybe a little less work needed. But we're not making houses fast enough to keep up with that demand, are we? I mean, especially not the homes that are in that price range of a first-time home buyer. Let's say anything below our average, so anything below, say, $460,000, $480,000. We're not making those new. There's certainly not a lot of those coming on the market, unless we see people moving up from those into sort of the bigger homes. But it looks to us like increasing the number of home buyers on the market isn't necessarily going to even help those home buyers, because they're going to be competing with
themselves,
more of each other. Yeah, exactly. Yeah, so it's a little bit nerve-wracking in that sense to think of what could happen in 2025 and certainly midway through 2025. Yeah. They're talking about further decreases in the lending rates.
Yeah, close to 2%.
Yeah.
Which I think is, good for big centers when you're, $1 million plus, but it's going to make buying and to some extent selling in Sudbury way more difficult as well. I think we didn't really schedule to talk about this, but I think if we had more boomers retiring people moving out of their houses, we're seeing a ton on the market of power of attorneys or estate sales. Mm-hmm. People are staying in their houses until they pass. Yeah. We're seeing them just leave the house to the next generation, whether they're kids or whoever's taking care of the estate. But I think that's the missing puzzle piece, especially throughout COVID, when people didn't want to go to retirement homes because they were afraid of COVID, and they were shutting down. Couldn't see family members, couldn't see the outside of the buildings really. I think when that hits again, and I'm not sure when that's going to be, those are the first time home buyer houses. It's not necessarily, we're not expecting brand new houses to be first time home buyer houses, although it would be nice. But when that circle of real estate starts connecting again, I think we're going to be in a much better situation than we are now. We're going to have more inventory at least.
Yeah, absolutely. You're 100% right there when we talk about, going back to COVID and seniors not feeling comfortable moving into retirement homes. Seniors have a lot of autonomy in their own homes, and that's what they're looking for. The home might not serve them necessarily. The home may be too big. It may not be exactly what they need for mobility and for their own lifestyle, but there really isn't an alternative for them to move into. Mm-hmm. We are seeing a little bit more of those types of homes coming up, like the slab-on grade, small 2-bedroom, maybe 1 or 2 baths with an attached garage, those type of smaller semi-detached being built. They're still a little high in price, and in my opinion, being in the high $400,000, almost mid $500,000 range, it's probably too high for most seniors to move into, but certainly more of that type of housing, which is very accessible, hopefully affordable, will bring those seniors to be able to have a home they can live in, feel they have autonomy, feel secure and safe, and then it will bring their old homes onto the market for those first-time home buyers.
And we have a couple really good developers in Sudbury that are actually starting to build them. I think the first was probably the I can't think of the street name right now.
Bonaventure?
Not Bonaventure.
Oh, Azilda.
Azilda. Yeah. I forget the street name.
Meadow something? No.
I don't know. Anyways, so I think that was the first one, but it's a beautiful subdivision. All townhouses with the garages, with backyards, slab on grade. I think it's really nice. And then now, obviously, Chelmsford, there's some along the highway, and then Bonaventure as well has slab on grade. I think, obviously, that is, to some extent, the future. Most of them are semi-detached, so they need to start, I think, expanding those out to, 4 or 6 in a row. But obviously, some of them are rentals as well, which I think, a good mix. It's $2,500 a month to rent one of those houses, or if you're going into a retirement home, it could be upwards of $5,000 depending on the package. But it's expensive for them either way.
Yeah, and I think that new construction can also be very expensive for seniors to own too, because we think about the property taxes. The property taxes of a new construction, even if it's a semi-detached or a townhouse, they're probably going to be upwards of $5,000 a year or more, so you're close to $500 a month just on your property taxes, and that can be a bit of a hit. But anyway, hopefully we do get more of that sort of housing to help have everybody move from one cycle of home to the next, especially our seniors, to have a place where they feel comfortable, and we can get more housing units on the market.
Okay, so I have a question for you. Possibly the last question of this podcast. Do you think the prime rate decreasing is a good thing or a bad thing?
Selfishly, I feel like it's a good thing, right? I feel
your mortgages
I feel so good at those 3 mortgages. I'm like, they got so high. I mean, some of them were upwards of 7% for a little while there. And just to see that much interest going and that much principal, it's been just something that I've kind of just been holding back for the last few months, waiting for those rates to go down. So selfishly, yes, I think it's a good thing. Overall, I don't know if it should continue, though. I don't know if we should continue decreasing the rates, because I'm more concerned about home buyers. We love to have them have the affordability, the ability to buy a $400,000, $500,000 home, get something that's move-in ready. But if we have too many home buyers looking on the market, they're just going to drive the price up again. And that's going to be really tough for everybody.
Yeah.
Everybody in the market, not necessarily sellers looking to sell, they'll do well, but it's going to be tough for those home buyers. So it's a tricky balance.
Yeah. When those sellers are trying to buy, they're
going to be competing.
They're in the pool with everybody else.
Yeah, absolutely. And I think that was the hard thing during COVID too, was like, even if someone wanted to sell, they knew they could sell their house tomorrow. It was no problem.
Yeah.
But then how the heck are they going to buy something when they're competing with everybody else? That was really the challenge. So we were coming up with different sort of strategies, like, do you maybe rent for a little while, sell first? Do you do sort of like a rent back of your current property? There's all sorts of strategies that, we were kind of thinking creatively what we could do to help move people into the homes that fit them, whether it's a bigger home, smaller home, or different location, or whatever the case may be. But it can be really, really tricky to balance all that, and it's definitely a concern. I think I don't think it should decrease anymore. Maybe a little bit.
I mean, I would say to that, it kind of needs to some extent, but I think we should give it 6 months. Let's see, because they say when there's a decrease, you only can tell the effects 2 or 3 months out. So I think we should wait until, springtime next year, maybe even longer than that.
Maybe more like summer, because I feel like if it keeps decreasing to spring, when you have that flood of properties that naturally comes on the market in spring, it may not be the best thing to have those two things hitting at the same time.
Yeah, of course.
That's my thought.
But I mean, you listen to the experts from, Toronto or big centers when they've had tough years this year. That sales prices have gone down. There's not as many. There's I think it was this year was the record year for most condo units on the market in Toronto.
Oh wow.
So obviously they're struggling. They haven't seen our year where house prices have year to date gone up $50,000, and I think it'll just keep rising. So obviously the interest rates are maybe for the greater good of the country, but it might be a small detriment moving forward to Sudbury. Yeah. Well, hopefully we find the right balance that works for everybody. That's right. Awesome. That's right. Well, thank you all so much for listening to our podcast. Thanks for listening to the TNT podcast. If you've enjoyed what you've heard, please don't forget to subscribe, send us a comment, and share with people who would like to hear more about real estate. We'll catch you next time for more tips, strategies for navigating Ontario's #1 real estate market.